you look at, and actually Fisher has a different opinion on Denmark than I do, but if you look at some of the countries that have implemented negative interest rates, some of the lenders have actually found a way to pass the costs along to the households in the form of higher borrowing costs, higher mortgage rates, and such. And those are the kind of things that worry me, that in our banking system especially, that banks aren't just going to sit back and let their profits take a haircut standing still.
But the Fed's not seriously considering this, are they?
Well,
they're looking at it.
Neither was Kuroda.
Well, but
until he kind of shocked the markets.
So they'll just follow suit and do something that might weaken the currency, but probably won't have fundamental effects on the domestic economy?
Well, I mean, what's on the side of the United States is that we have a completely different financial system infrastructure here. We have a huge money market fund industry that you can't just willy-nilly put out of business. It's just not practical. It's not as practicable as it might be in other countries. I think it was a little bit easier to execute in some of the European countries.
I wanted to switch to oil because you're from Dallas. You have a front row seat to some of the carnage that this oil drop has done to our economy. Does the very tight correlation between oil and stocks, which we're seeing again this morning, make sense to you?
Absolutely it does. You know, obviously Houston is one of the main victims of this, but a lot of the private equity money, for example, came out of places like Dallas, and you can drive around kind of the high-end real estate areas, and you know it's very anecdotal in nature, but you see for sale signs popping up everywhere. There's a lot of stress beginning to emanate, and from what I hear from my friends in Austin right now, all of the air coming out of the unicorn bubble is also beginning to seep into the Austin economy as well. They say that the U.S. economy can withstand this decline in oil prices, but the number of states that are kind of teetering on the brink of recession are beginning to add up.
How much pain or stress, perhaps, does it put on these companies when we now see 2, 3, 4% moves, as whether it's up or down, but as a daily norm now, that kind of volatility? Is that really hurting the planning for these companies? Does it just throw off any kind of investment plans?
Well, when you consider the amount of debt that these companies are shouldering and how skittish a lot of the banks are, and you start to read stories like in the Wall Street Journal last week that credit lines are at risk, a lot of these companies are in an extremely fragile state because, again, the Fed left interest rates at the zero bound for as low as they did, so they were able to access an overabundance of debt, and that's really coming back to haunt them right now.
The fact that the Fed raised rates in December finally after nearly a decade, and then interest rates went the opposite direction, turned south, Treasury yields lower, mortgage rates lower, auto loans lower, is it stimulating the economy at least?
One would hope, but if you looked at kind of the entrails of the consumer confidence report yesterday, there wasn't really a change in people's plans to buy a home. There was barely a change in people's plans to buy a car. So one has to wonder why the expectations component, despite the fact that prices at the gas pump have fallen as much as they have, you have to wonder what is bothering the U.S. consumer right now. Because clearly we're starting to see a little bit of skittishness among households.
Danielle, let's go international for the last question. Sarah's expert Twitter question today was which of the pound, the euro, the yen and the yuan has the most bearish outlook for the rest of this year?
Well, I'm going to have to go with people who have concerns about the pound going forward. I mean, I think we're all a little bit surprised at how vehement the debate has gotten to be in Great Britain right now. So that would be where I would have my focus.